So, hello everybody. Here we go for another one of these Substack videos, 23rd of April, just after Tesla earnings. Thought we'd have a look at this. No trade calls, no recommendations, or responsible on stuff here for educational purpose only. So, just a little bit of an update on the framework on what we were looking at. So, basically, after this very explosive move off those April lows, Tesla tried to make a ramp back into all-time highs and, repeatedly failed here. We had a little bit of a retracement and then we just had this little bit of a tag right through them, right? And then we couldn't get any traction. Now, once we got this aggressive break here, what we were saying is these breaks tend to be ugly. And especially if we get traction, we start to talk about 300 before we see 500 again. And, that base case accelerated the moment we managed to take out these lows too. Now, right here, we bounced off a very interesting zone, the 340 zone. And we talked about the fact that both, whether you're a bull or a bear, you'd expect to see a nice bounce there. And indeed, we got that bounce. Now here, what's happened shorter term? You see this move here, so lows to A to B. Basically, we came back into this area, tried to hold the 50 back, then broke lower, right? Filled this gap and tried to accelerate higher. Usually, when you get this type of action, it tends to ultimately come back down and take out the 61.8. So for those of you, I had a couple of people asking if this 50 back was solid. I wouldn't even consider this. I wouldn't necessarily even have this on my chart. I think what's more important here are a couple of reference points. So first of all, the psychological 420 mark, Elon's number, and you can see that it's been a turn point in the past, but also we've got a little bit of a confluence here with this 100-day moving average. Also, if you look at the move down off those highs into these lows, you see that you've also got this channel, right, coming in there. Right now, this is set at a 3 standard deviation, but probably if we flip it to 4, it's coming in right in line with there. But again, it's giving you an order of magnitude or an idea. So I think here to the upside, any rally that can't take out the 420 and we can't get daily closes back above the 420 still means that pressure is on and likely these lows continue to get tested again. Now, on a day close, weekly close above the 420, my base case would shift and say this is likely going to accelerate very aggressively, and I would expect it to start making an aggressive move to go back to fill that gap and ultimately, whatever way it wants to do it, ultimately take out those highs, clear the 500 level. But really, in terms of upside reference, the key bull bear line is likely going to be that psychological 420 mark. Here inside this area, I mean, it's very choppy. You've got a lot of references, which is this previous low area, the 2025 open. You've got these moving averages. But right now, again, I would focus on the 420 as an upside level. Now, clearly, these recent lows are going to be interesting, and that's going to be the pivotal level for a move back into 300, and 300 is the pivotal move for a full unwind of this move from April A to B. Now, I know some people, even when we started to talk about the potential full unwind here, everybody said, a lot of people saying it's impossible. Well, I invite you to go back and see a lot of those other tech charts. That happens, it happens. It's not a crazy move. It can easily happen. But going forward here, shorter term right now, if you look at this move off these lows into these highs, intraday today, it's interesting. You can see that basically the 10-day moving average is in line with a 50 back of this move A to B. So shorter term today, this is the level bulls need to hold, right? As long as this pullback here holds, then your base case assumption is that the market may still try and go for those 420s in extension with just a little bit of this pullback here pre-earnings. People come in, they buy the dip, they go for the gap fill, and they continue to go back to the 420. Or if we lose that mark, then we likely unwind all the way back down. So if you get a day close below the 10-day moving average, we unwind right back down into this low. I think the important message I want to leave you with here is that not only do we have a very messy geopolitical headline flow, but a lot of charts are stuck in broader ranges, and we likely need a very, very strong catalyst to break outside of those ranges. So I think right here, shorter term, anything that happens inside this swing high or this swing low is likely noise, right? I would categorize this and broadly neutral action, we really don't know what's going on. Now here, as you can see on earnings, it's coming back inside this zone. So it's telling you it's still, we don't have enough to really break our out of this range. Maybe it's going to be down to geopolitical headline flow, escalation, or proper de-escalation. And that means, if we got the all clear, then we take out these highs, we take out the 420 and we rip back into those highs, filling that gap. Or if indeed conflict intensifies again, there's no sign of resolution, everything starts to trade heavy, risk assets trades heavy, dollar catches a bid, crude catches a bid, and we break this and we ultimately go back into the 300, which is the bull bear line, protecting the full unwind of that move. So again, very messy inside this range, but I know a lot of people like to look at Tesla, so I wanted to give you some of the technical references we're working with here. Wishing everybody all the best. Talk to you guys soon. Take care. Bye-bye.